So let's start with the indices. Quick peek. The official indices review will be tonight. And this is a weekly look at the S&P. I don't think I need to say anything. We're like a skip and a hop away from a complete breakout above the high. And if you remember, the S&P target is much higher than here. The SPY, for example, is 530 to 560. And with the absence of, quote, bad news, we are headed there. So if you are bearish, like me, biased bearish, make sure your bearish positions are manageable, like mine. Credit call spreads, leave room, book them, balance with a few longs here and there. I am being tactical. So in order to take a peek as to what's going on a little bit better, I'm going to drill down to the daily. And you can see how every dip is being bought because we have guarantees from the government that they're going to do a QE, even when we don't have need for a QE. So there's its discrepancy there. So the bulls have absolutely nothing to fear, or so they think, until something comes up. The VIX is 12.5. That's like Bernanke time almost. I don't think we have Bernanke time type of safety. We are potentially in a rising wedge, that blue stuff on my screen. So it can drop at any point in time, but they are buying dips, and that's what's going on. Now I have these green arrows that shows once things break down, and they will break down, it will be ugly once we hit and lose that red line. There's no imminent threat of it. There's just a normal, oops, something comes out of nowhere. Okay, the Qs look the same. The NASDAQ, that is. I'll show it to you. Take out the lines. Same thing, all-time high, skip and hop it away. Dips are being bought instead of an ascending channel, trying to recover from this correction that we had not too long ago. The IWM is nowhere near that. In fact, I'm going to say it again. The IWM is headed much lower if they don't break out. I'm going to show you, I think I drew it by hand, big yellow marks. There's nothing uglier than that. I mean, the marks are not accurate. You can move them down, but I promise you that this is technically sound. If these guys don't break out, or once they do break out, they peak above, they're at risk of doing this. Timing wise, this will stretch through the summer. So make sure you know that it's not like tomorrow. This is called a wolf wave. Technically speaking, soon enough, we should have a correction from these guys, even if they do break out. So keep that in mind. So what does that mean? Tactical. Tactical. Whatever I'm going long now as a company, I should know that I'm doing it when markets have never been higher. So the odds of markets dropping a little bit is higher than normal. That's just common sense. Okay, let's hit Apple. So generally speaking, Apple became a bargain compared to the market. When it fell below 180 and it went to 160 whatever, it was a bargain because all other stocks, mega caps, were at or breaking or trying to break into new all-time highs, and this one couldn't hold support. Now, I don't think it's out of the woods. That big red rectangle is the February reaction, and they really need to hold 180, and I think they're uncomfortably close to that 180 mark. If they go back below 180, I think it's a big setback for the bulls. So keep that in mind. Apple is a good company, bad leadership, but the company is still pristine. Okay, the rally left some areas of interest candles wise, so they might have a dip this coming week. If they do, they need to hold 180. That's the goal for Apple, and there are sellers, so 187 could be a catalyst up, but it is an area of selling. Look left, there's that February reaction candle. That's like one earnings reaction. So Apple is kind of stuck right now. AbbVie, I thought at one point it's a good buying opportunity, but I don't know the business as well. So if you're an investor, you should evaluate the business. If you're a trader, I'm looking at this thing, a low and a high and somewhere in the middle. So okay, it's vulnerable to come down to the 150s, 154 maybe, to erase that candle, technically speaking, but it should be inside of a support zone. So if I'm long already, I'm not looking to get long any more than I am. If I'm looking to go long for an investment, I should just start a position and leave room to double that. And I don't usually add unless I'm losing like 20-30% from my first entry. So maybe selling puts can work. There are no earnings for another 75 days. Adobe, we discussed this in the live room. By the way, you should make it into the live room if you're able even to say hi. Technically speaking, short term, this is target 1 of 2. Target 2 might be in the 474 area. It doesn't necessarily need to go there, but I look left and they're selling rallies. If you can see here, rally sold, rally is being sold. Now the question is, on this second rally being sold here, will it do what the other one did, which is come to a place and lose a fight and make a lower low? That's the question. So that's what you would monitor. You do have support into 470, and the other one is the 460 that must hold. Otherwise, you might draw this green drawing that I have. Volume vacuum means on the way up, it must have rallied fast. Those are usually my comments. And it cut through an area where it didn't have time to consolidate. Yep, like this one. So if they lose a certain level, they might just whoosh lower. And also these blue lines are longer term moving averages. They tend to be resistance. And we're talking zones. So what does that mean? Adobe has the opportunity to get to 528, 530. But first thing that they need to do is hold the 472 area. That's my opinion there, 471, 470. And then break out of 497. Remember those two. Break out of 497 before you lose the support below that we just mentioned. ADI, let's zoom out. It's looking like it's in a breakout. Is that an all-time high? Okay, so whenever I get requests on things like that, I honestly don't understand what the people are asking me. Are you asking permission to book profits? You have my permission. Are you asking to go long? I don't usually invest in a company that is breaking out unless I am a momentum trader. So think about it. Am I here at 130 before the breakout? Or am I here where it's looking like it's breaking out and it's coming down? So that's up to you. Are you a momentum trader? Then if you are, then you can take your chances chasing it up. Are you an investor? You're probably a little bit late for the easy rally. Why not buy the dip? So make sure you know which one of the two you are. I wouldn't add to a current position. AMC, what? Okay, what? All right, I don't know why anyone would even invest in this company. This company literally thieved its holders. In my opinion, the CEO, the management team just literally robbed their investors, and they created. They literally created a situation where they wanted to become their own bank, so they started this ape or whatever. So anyway, if that's that company, I wouldn't touch it. If you're an actively trader, if you are actively trading the stock like minute to minute, pop into the live room, because then we can talk about that. That's doable. And let's see here. 1 second, okay? Okay. So trading is fine. Investing, I wouldn't touch it. Amazon, I believe, made a new high or was trying to. No, it did. So clearly the momentum is with the buyers. It's a good company. All by itself, there's no reason to short it, but I do know a few people that are trying to, using credit call spread, bear call spread. So they're not actively short the stock, like the typical way to do it, and they're not holding naked puts, which is pretty difficult. Broke into all-time high. Now is going back to establish and reach the base that from which they sprang. Healthy reaction inside the stock. So I do like the company. It's one of my favorite companies of all time. If I'm looking to invest, not so sure I would run into it right now. If the markets are higher in the future, quite simply, I've always said, then Amazon is probably leading it. So I don't know the new leadership. Is it as competent as the old one? Hopefully, yes. But here, if you twist my arm as to what to do with Amazon, and I'm not an active trader, what I would do is I would short it healthily by going out to the end of the year, selling a call spread and buying a shorter term debit put spread, say, for another 2 months. This is a healthy short for a dip. I don't think a stock this big should leap over an area like this one around 160 when it's not NVIDIA. Yes, it's growing, but not like NVIDIA. So NVIDIA gave us a game-changing headline that said, oh, growing 40% on sales, that's pretty healthy. Let's just leap over this whole area. This one didn't do that. It's just continuing what it was doing before, and it's just leaping. Maybe it has a headline coming that says, oh, we found another 20% of growth out of nowhere. So just be careful chasing too late. APPN. So this candle that we just placed this week or late last week, whatever, this candle on earnings, looks like, okay, let's show you where the buyers are, and they're right here. So anything below 31 is unacceptable to this stock. That's what they're trying to do. That's healthy until they lose it. So they gave you a warning. Next time they lose 30 and they end up losing 28 in the process, I think the trip lower would be pretty big. They do have support scattered. I don't know why that would happen. The P&L looks healthy enough. I'm not exactly familiar with the business inside and out, but from a perspective of a P&L and sales growth, there are no like obvious flags. So technically speaking, you do have a strong buy level that absolutely needs to hold. As a bull, I want to see how they handle 34.50. That looks like a pretty tough area. Okay, look at that. What was support might now be resistance. You just have to keep that in mind. And it starts at 34. It accelerates at 34.50 to 35.50, and it should be a wall at 37. Okay. ARKK. So this is ARK Invest ETF. I don't know exactly what's inside of it now, but the top 10 companies usually are about 50% of the value, and they usually involve some pretty good companies like Tesla. The risk on ARKK, folks, technically speaking, is that it's in the news all the time, some good, some bad. They are trying to do something new, which is manage an open book on Wall Street. I think they're always going to be vulnerable to people mocking them or gunning for them. So that might be a behavior they choose to change soon. Meanwhile, if you lose 41.50, you might end up at 37.50, if not lower. Two potential targets. One is about this big. One is about this big. Those are no joke, and I'll share with you how that plays out. So the technical target, if you want to be like truthful to what an inverse cup and handle, is way down there. My eyeball says, okay, they might have a pretty serious bounce or stop support right here. So let me zoom out and show you. Look at this, and this falls right in the middle. So the problem with this is they lost the level up here where this is the target. But now that they hit this target, they may have triggered the loss of 45. So we can add this line up here. I know these are, I'm doing them on purpose, this squiggly and not surgical, so you guys would understand that with as fast as the market is moving, we can't just rely on just perfect rulers. All right, so this is a picture. So we do have support at 38 if they need it, and anywhere inside of these, but there's a lot of weakness that they can come after. So how do you avoid all of this? You need to be at 51, and that pretty much looks like a tall order. We've just finished earnings, or a lot of the earnings. So who's going to be the catalyst? Which champion is going to bring us to 51 on this one? Okay. So what I would do is go into the companies that are inside this company and see who's left to report and who's doing well and who isn't. Tesla is a major one. I remember that from memory. I can't remember the other ones. Probably Square and companies like that. Wow, talk about a party hat here. Way up to the moon, and now they're coming back down. we have lower lows and lower highs for a while, and now it's trying to stabilize. So now they made it so important to hold 31. Now, if you lose 31, I think it's going to 26 or 24, the zone down there. We do have a lot of support down there. So these candles look fast, but that's because they fell off a cliff. They still leave some risk down there. Also, in theory, this looks like a head and shoulders that might have $16 of downside. So in theory, one could say, hey, you know what? This head and shoulders is going to 20. So if I'm long this company, I'm worried. How can I defend it? I don't know if it has puts or whatever. Spends a lot of money, has no growth, and is shrinking, in fact. So be careful. If you're an investor, if I am an investor, like for the long term, I would not add at this point. I might have an opportunity to add in the 2019, 21, something like that. Might. So I'm not going to add more here. ASML, look at that. Support was lost. Now it's no longer support. It is now resistance. So there should be resistance here. Where? Anywhere below this area. So you're coming back with a nice breakout into resistance. You could get to 970, but it's not going to be easy to get to 1,000. You do have a lot of support where now you have support around 900 and much better support around 875 or lower. Your target is still this bottom here. What do I mean? You lost some pretty important levels that you're trying to recover, like this node right there at 930. If you don't recover it and stay above it, you are in the process of pricing it down, and you left a lot of reasons to come back here. This rally right there is not good. This is too fast and leaving a lot of weak spots in the chart. Look at the volume on the left. There's not a lot of volume. So this is not a bad P&L, but what's with the shrinkage here in this last quarter? And this more than a year, so it's not seasonality. I mean, this is a pretty healthy P&L. One would ask what's with the shrinkage in sales. So do that. Broadcom, super important company to the indices. Too stable of a company for it to have this kind of a choppy price action in the stock. It's going to be difficult to get to 1400 and higher. It's probably going to be a little bit easier to drop to 1280, but it's going to have a lot of support anywhere below 1240. So what you see on the chart is a bunch of buyers below and a bunch of sellers above. If you crack above 1410, you might have enough to burst. So the way I personally would do it is I would sell some calls against my longs if I have them, or sell some calls to be able to sell some puts. So I would trade it up here. Look at the sales there. They jumped up quite a bit. So this P&L is almost fake. It's so pretty. And the company management has proven itself to face adversity and pivot. So I wouldn't short it unless I'm technically shorting it. In the long term, it's a healthy company. Here, it's not an obvious entry point. So if you're a trader, you need to look at all these peaks and what will take it above these peaks. American Express is at an all-time high. Yeah, so I'm very leery of banks. Buy a call? No, that's absolutely not what I said. I would not buy a call. Why would you buy a call? If you can find me a reason why to buy a call, then we can discuss it. And if you do buy a call, make sure you put a stop loss. We're talking now. Somebody asked me here about AVGO in the live room. Okay, so if you have a reason to buy a call, do let me know. If you don't have a reason, you're going on feelings, then I don't think you should buy a call. The calls on this one is not cheap. AXP. Okay, so what's the question here? I honestly don't know what the question is, so maybe I can go back. You had questions. And this is not an obvious point of entry, is the most simplest way I can say it. You may make money if you go long. You may lose money. The odds of losing money are probably much higher, and the amount of losing is whoa. So not not an obvious point of entry. Remember that acronym? Nope, not an obvious point of entry. You want to short it, you can, but you can short the market as well. Probably easier than shorting a single stock. Let me see, actually, AXP. I haven't looked at it. See, the sales are growing. That's amazing. So America is getting in debt, but these guys not famous for revolving debt, but they offer revolving debt opportunities. So do we have a credit card crisis coming? I'm not an expert. You should dig into that. I bet you there's a crisis brewing in the credit card, in the unsecured debt lending arena. If indeed we are piling into, as a nation, credit card debt at a record rate, and a rate cut doesn't come, we're going to have a lot of bankruptcies, and that'll wipe out a lot of their, quote, income here, their balance sheet. Okay, so Boeing, and you know the story with that one. The social media attacks on Boeing have not stopped. It feels like there's an entity out there, or two or three, gunning for it, floating around videos that are not true. Whatever they did or didn't do, anyway, it's not a criminal activity as a company. The P&L is what it is. The sales are already there. Sales is not their problem. Deliveries are, and regulations and headlines. So I was long, and then it rallied, and then I shorted by selling calls, and I stayed long by sold puts, and then the sold puts got in trouble. You know about them, and now they're no longer in trouble because I closed them on that last spike. And minutes later, this headline broke out of nowhere. So you see how it is, a headline stocks. If it was me in a sold put in Boeing, if I'm intending to buy shares, I wouldn't panic out, but I would take out the risk if possible without losing money. You can look at these two purple circles in the back. We're somewhere in the middle. You can see a lot of sellers above 195 and a lot of buyers below 174. We did fall below that, but that's where the battle zones were, and they kind of recovered it. So as long as we're above 172, I'm comfortable that technically there's nothing scary, imminent scary, and the earnings are out of the way. Berkshire, I am short and making money. What I did is I sold calls sometime in the last few weeks. I don't remember. Maybe I sent it out. Maybe I didn't. I did speak about it live to a lot of people. Great company, clearly. This is Warren Buffett. He invests. His investments are solid. I disagree with one thing they did, where I think half of their portfolio is Apple. And there's always the potential of having Mr. Buffett, he's 90, whatever he is, 95, respect to his mind, but the stock is tied to him, so there is a, quote, headline coming, right, in the next 10 years. Let's put it that way. But that shouldn't say that the investment is gone, because the companies he put in the portfolios are solid. From that perspective, I would be an owner of that stock for a long time. Is this a place I would add to my longs? Technically, maybe that it's breaking out of 410. This is the #1 contributor to the XLF, the banking ETF. I'm not too excited about it. I am short via credit call spread and made money. So I tried to book it actually on Friday and it didn't fill. And I would not buy calls. I would not buy calls. You could convince me to hold shares if you want to be long. But if I hold shares already, I'm not adding. If I wanted to start a position in it, I would definitely start no more than 20%, maybe 30% of the allotment. If I wanted 100 shares, I would take 20, 30 of them, and that's it. I want the ability to double and then add a little bit more on top of it. And I wouldn't add until it loses 396. BX, look at that. They look very similar chart-wise. We've traded this one before, but it doesn't pay as much as it's risky. Look at how active this chart is, and the rewards and options are not that great. This stock is going into a prior fail. So consider the rally that happened back in April, late April. It ended in a pullback. So also if you look left, This is a heavy point of volume for this whole period of time. So if we look back to this past February, it looks like we've had just as much action above here than below here. So now that the bulls are up to this level, it's onus on them to show that they can get to 127. This peak, consider that a roof. So anything close into that peak is going to be difficult. So just know that this guy right there matters. So this should be R. The whole zone should be R. R is for resistance, which means I don't start calls into resistance. Buy the dip. If you think that this is going to 130 and you're somewhat of a trader, I would rather get long on a bad stint, like a drop into 121. CCJ. So some people in our group are long CCJ, I think. For me, I would trade the short side. Technically, these head and shoulders that are inverted, that are slanted that way, have the opportunity to be bear traps. Like this past poke yesterday, Friday, could have been the bear trap to get us back down to 46. It could have. Okay, you do have support at 49, and you have support at 47, 46, and 44, maybe 43. I don't like these candles. It seems like they're too violent around the area around 46. Now, one can argue that the breakout was from 46. I'll show you a visual. Technically speaking, this could have been a breakout that is ongoing, and the target of that breakout can be higher. You got this guy, could be confirmation of support. So let's see if this indeed is a breakout or is it a fake out. We'll see. So how do I do this? If I'm not a momentum trader, there's no need to be involved in this one. It might be above my skill level. Momentum traders can figure it out. If I'm an investor, this is not an obvious entry point for the long term. I've traded this once before on the short side. I made money, even though I was opposed to somebody who knows it inside and out who was long, and I believe they made money too because we shorted it by selling something to somebody else. We didn't buy calls or buy puts blindly. CELH, they had an earnings report, and the initial knee-jerk reaction was like, oh my God, I hate it, and they went all the way down to 64. And then here they are higher. That's a pretty aggressive move. It still doesn't make it an obvious point of entry, but it's definitely not a short candidate. So if you're an investor, good job. You picked a company that seems to be delivering a good P&L. If you're a trader, you kind of missed the easy trade. So it's one of those, it's too high to chase and it's too hot to short. So unless I'm an investor in it already, I'm not touching it right here. But you should know that everything below 74 is bulletproof. Why? Because they just showed us it was. They whatever said whatever, whoa, I hate it, down to 64, and boom, there it is, 20 bucks higher. That is a massive reversal. Look left though. Look left. If you're skeptical about spending time listening to my videos because you don't believe in technical analysis, that's not a coincidence. Anybody that ditched their shares here, or anybody that bought puts here or sold calls here, panicked out of the stock here, just needs to look left and ask yourself, what happened the last time the stock was here? What happened is you had a big rally and you had the chance to do it again and you didn't, or you did the opposite. If you didn't, that's one thing, but if you did the opposite, whoa. So conversely, look left. That wasn't a good place to start longs. CHWY, good business, a terrible reputation on Wall Street. I've had my rant on it before. People say, oh, Amazon is eating its lunch. Where? It's still growing in sales. Oh, margins are deteriorating. Where? I don't see it. Their margins are still fine. So far, the theoretical on it, the bearish theoretical on it is just that, words. I don't see it. Now, I didn't do a deep dive into every word from their P&L. Or their report, but on the face of it, the P&L is not awesome, but it's not shrinking. So the metrics are not deteriorating at an alarming level, yet the stock price had been. Finally, it's stabilized. So how do I deal with this? If it takes out 1650 or 17, it might have the chance to burst, and then it has to face a big battle into 18. If it takes out 1850, it could get to 2050. Now, the easier thing to say that it has support anywhere below 1450. So how do I deal with this? I sent out a note and I said, buy shares, half of a position, and if it falls into the low teens at 12, add the other half and invest in it for the long term. And that's about it. Or sell puts to own shares. If you get assigned, job done, you got into your first tranche of shares. If you didn't, then you made money along the way. The other way to do it is to sell puts, buy calls way out in time. So good company on paper is still good, but the theory behind it is being job owned negatively. And it does have a lot of buyers below 15. You can see them on my chart, and a lot of sellers above 17.5. You can also see them on my chart. You can see that one, absolute sales here. So covered calls, yeah. If I own shares, I would definitely sell calls against my shares. Wait, did they report already? CHWY? No. CHWY has earnings in 17 days. So you're going to have a wild move in 17 days. Oh my gosh. Okay. So pile in, all in, all in, all in. Just like that person right there, all in. No, I'm being sarcastic. So anybody looking to go long Costco up here, it's like, what? Where is the fire? If you're seeing a cup and handle or something that's going to take it up to here, whoa, that is a huge assumption. So this company is amazing. There's no doubt about it. Look at this boring P&L that doesn't stop growing, and it's a boring kind of a company. But if you think that this is an opportunity to go all in into a long position, you know something I don't. Earnings are in 18 days. Also, at the beginning of every month, this one has a mini reaction to when they release comp sales. Like every month they release what were their comps to the month before that, to the year before that. So be aware of those two things. I would absolutely not start a long position here at the risk of missing on a beautiful breakout, because if I just pick up the phone and call that person and say, hey, how was your experience last time up here? They'll say, oh man, you wouldn't even know the half of it. I just lost everything I have in it. So a 10% drop followed last time. And look at that. That rally was into an earnings report. So great company. Timing wise, you probably will have a better entry point clue. When? I don't know. Personally, if you ask me how to trade this is a TH. It's too high to chase and it's too hot to short. But if you twist my arm, I will sell a call and buy a put spread in it way out in time not to deal with it. If I owned shares, I would be selling covered calls against my shares. Just make sure you're okay getting rid of your shares just in case they call you away. It's a tough starting point for a new position. I don't care what time frame you look at. Wow. CRM, good company. I haven't seen, I don't watch TV as far as news, so I haven't seen Benioff, their CEO. He used to be very outspoken on Jim Cramer every so often, and he was a very good salesman of his company. I can see 280 zone as difficult, and it's consolidated. So when a stock falls from point A to point B, consolidates, so you can see that there was an area here they needed to hold, they couldn't, and then they fell here, and now they're consolidating. What is the outcome? This, because the consolidation is either they're ready to ramp right back up or ready to let loose and come back to a better base from which they can build a ramp. Too soon to tell. You have a seller at 283, you have a buyer at 266. If you take out 283, you're probably going to get to 298, 297, and then hit a wall. So I'm going to say that there's a resistance zone up here, and it's definitely a resistance zone up here. Okay. There is an opportunity to get up there, and I just verbalized it. Markets are at all-time highs. If the markets blink, this is in danger of losing this guy. And if it does, I think it'll be in the 250s. So if I'm long, I'm not adding. If I'm looking to get long, I think I may get better entry points. Earnings are in 17 days. I don't doubt their earning power. The P&L looks pretty good. These guys, believe it or not, they invented the cloud. So Amazon built it, but they invented it. CRM, if you don't know, went against Microsoft back in the day with software as a service, memberships, subscriptions based versus selling, oh, which version of Windows, which version of Microsoft Office do you have? Well, now, like me, I'm a subscriber. I pay for a license. So these guys invented it, and they beat Microsoft when they were a tiny company. So respect to them. And I don't short it unless I have a really good reason. Up here, I would just avoid longs. CVS, a lot of people are interested in this one. For me, I would avoid it because it seems to be headline riddled with headlines. Healthcare headlines, some retail competition headlines. I don't know. It's not worth the hassle. So from a trading perspective, you fell off a cliff at 66. And here you are stuck below 57 to 54. That's your range. And look at it. I mean, there's nothing in sight. You're like on an island. Oh, okay, this was a place from which they bounced before, but that's ages ago. That was the pandemic. It's stuck in the pandemic levels when people were not moving. I just don't know what to make with that. So study the company, figure out its future. Maybe it is a good opportunity to get long or not. Maybe it's worth a gamble. And I insist on the word gamble. There are sellers into 60, 63, and 65. Anything above 65 should be very difficult to overcome. And you better hold that low from recent time. Deer, bearish setup, short term, midterm. The idea is to not go long into a prior fail until they take out the prior fail. So the good news about Deere is a good company, excellent P&L, great management, time tested, and I don't think it's a recession proof fish, like Caterpillar almost. So if technically they can get above 415, wherever they want, they can go. Meanwhile, I would rather buy the dip into 400. You might be vulnerable into 400 or 395 before you can take that out. And you have sellers above. So the upside target of beating that 415.16 is somewhere 440, but you're going to have to do it against all these sellers. It's an okay opportunity, but after a dip, that's the short term. The investment thesis on it is solid. And earnings in 4 days. So whatever I said doesn't really matter. This is the earnings reaction. Last time was a dip. The time before that, dip. The time before that, dip. Okay. I usually say it's a coin flip. Pop and then dip. Not a good thing to go long into the stock going into the earnings, although it's still a coin flip. DELL, I do not trade DELL. Same comments as Deere. Has a breakout opportunity just above, but it would be better to buy the dip into 125. Dollar General, didn't they go out of business? Didn't they close all their stores? Or is that a different company? I would not, quote, invest in the stock. I definitely would not invest in it. If you want to trade it, let me know. We can try to trade it. You have support into 130, sellers into 160. You're in a supposed base into 130. Maybe you get some upside movement. Couple weeks, 2-3 weeks, you're going to have an earnings report. I don't know. 145 is a lot of resistance, and then a lot more at 151. Okay, so a couple weeks ago, I told you the Dow on a weekly basis has a short opportunity. It's still there, I believe. Oh, yeah. So if the Dow doesn't break out, and in a big way, it is vulnerable to come down 8 to 9%. And unfortunately, the stop out on this red W is not until like 425, 432. So if you're short, you're going to have to take a lot of pain. I am not short the Dow, but I would short it on a pop. The only way I would condone shorting this thing is just simple buying puts or put spreads. I have to warn you that the DIA options are not hot, so I don't choose to sell a call or a call spread. They don't pay me enough. So maybe it is better to buy. So if you're bullish, buy calls versus sell a put spread is what I'm saying. Here, I would be inclined to say that if it's not at 401, I think it's at 387 this week or 385. Disney, I've been looking to go long. I've been waiting. The dip is okay. It's not awesome. I think now rallies will face a lot of selling into 110, 111. So even if they rally, they're going to what just happened here? Face a mountain of sellers. Oh, look at this. So if you lose 104, you're going to finish the job and become buyable. Close these weak candles and I'll be interested. You could force me to sell some puts down there. Disney is a great company, has great assets. Everybody knows it. So regardless of what you hear in the media, it's just still an awesome company. DJT, so I don't know what they do eventually, and trade it. Investing requires you to do a deep dive as to what eventually they want to do, and that's above my pay grade. I don't have that much time to go dig into that. And for me, it's a good trading stock, and it's behaving well relative to charts. You could get to 64 because even though that poke is pretty high, it didn't transact a lot of volume. So if they can hold 46, they can get to 65, is what I'm saying. Theoretically speaking, they should drop to 40. And if they do, it's a trading opportunity. Buy the dip, maybe they're headed higher. Dollar Tree, wait, what? Dollar General, one of these two decided to close all their stores. Did they not? What is going on here? Anyway, 126 should be a wall. Anything above 125 into 130 should be a wall of sellers. And you better hold your floor from last couple of weeks. If you lose 116, I think you're going to like 106 or 104. They're selling rallies aggressively, and earnings is in 11 days. And when any earnings of its sister company, like if DG reports before it, they move in together. So you need to know the earnings report for both companies. DOLE, not an obvious entry point when it's going into a prior fail situation. At some point, they will break out that. So buy the dip. If you're looking to go long into 1180 or 1190, okay, I'm on board. And you go long, it curls back up, and it has an opportunity to finally recover some decency. Otherwise, you do have buyers, and the buyers are scattered from here on down to 1090. ENPH, I would walk away from adding. I don't want to say walk away from the company. So this is a yearly sales report down below. Every candle is 1 year, right? Every bar is 1 year. It looks okay. And until you go into the quarterly, what is this? Why are we falling off a cliff with our sales? Seasonal or not, that is something you need to answer for yourself before you jump into it. You need to do a deeper dive into their sales opportunity. If you lose 98, I think you go to 78. I would go long by selling puts, but only if I'm comfortable with their sales situation. I have not traded in a while. This box is support. This box is the sandbox that just happened from earnings of it and other companies like it. So now they gave you huge sellers at 118, huge buyers at 98. You lose either of those, you're going to go in that direction. It's probably easier to lose. If you lose 98, you're going to 80 plus or minus. Okay. I don't know what to say here except that 800 is a huge selling area. Anything above 780. And they're going into it. I don't care how strong they're going into it. Look how big of a pivot it was. Remember I said, you rally point A to point B, you consolidate, and if you break out the consolidation, you go as long. It works both ways on up and down. Well, they got into this zone. They're trying to attack now. Failed. Took them months to come back. Consolidated for months and then broke out. And then they lost it pretty quickly. Don't know what happened here. You need to find out what happened here. What? It wasn't even an earnings report. My God. This candle is from 840 to 740. I don't know what happened. You need to find out what happened on that day, because it might be fundamental and you're going into the middle of that range. That would be an exit. They may have just given you, hey, exit please. I don't know. You need to study it. Technically, this is not an opportunity to go long into that big candle. And this brings us to the first video ending. Stop recording.